Hello and welcome everybody to today's Commodities Corner presented by the Gold and Silver Club. So during today's session, we have a lot to be covering with you. We'll go through live market analysis. We will provide you with a watch list of trading opportunities. We'll go through where we expect gold, silver, and also crude oil to be heading next. And of course, answering questions and providing live support. Now, as always, any questions, any contributions, feel free to put those into the chat. There is a function for you to ask questions, so feel free to put any contributions into the chat function. Let me introduce you to the Gold and Silver Club. So the Gold and Silver Club is regarded as the go-to authority on commodities trading, as internationally respected experts. Our analysis and our opinions on the metals, the energies, and the agriculture markets, they are routinely sought by major financial television channels and publications, which include Bloomberg, Reuters, CNBC, the Financial Times, the Wall Street Journal. Of course, it's a pleasure to be here on Binary as well, delivering today's content. For more information on the Gold and Silver Club and our expertise, feel free to visit our website, which is www.thegoldandsilverclub.com. Okay, so with that, guys, we'll have a look at the overall performance of the market this week. It's definitely been a lucrative week, certainly from the standpoint of the minutes that we got from the FOMC statement on Wednesday, and also the OPEC meeting yesterday, which has caused a very large move in oil. So you'll see here there's a lot of red across the board, and a lot of this has been down to the big move lower that we've seen in oil. So oil this week has dropped. Most of this move occurred yesterday, over a 5% move to the downside on Brent crude oil, and also a 4.5% move to the downside on WTI crude oil. The big news yesterday was that OPEC agreed to extend their oil production cuts by 9 months. So this is what was anticipated. And as is often the case, and we discussed this also on Tuesday's training and last Friday's Commodities Corner as well, often you can see these moves already get baked into the price. So this was very much a case of buy the rumor. Once it actually got confirmed, it will sell the news, and it actually provided a great trading opportunity to sell into oil. I hope some of you caught the move there, because it was quite a significant move, a 5% move lower in one day off the back of that announcement. I'll break it down for you as we go through the chart and talk you through that in a little bit more detail. No surprise also on some of the soft commodities as well, to see a bit of weakness across cocoa, coffee, and sugar this week too. And that is often the case where you see a big move to the downside for oil. We've also seen a bit of strength in the dollar over the last couple of days too, which has put a little bit of pressure on several commodities as well. And also, especially for sugar and coffee, the Brazilian real has been very weak this week off the back of the president in Brazil being impeached at the weekend, and that's caused weakness in the Brazilian real, and sugar and coffee being major exporters from Brazil have also weakened with that news as well. So what we'll do, we'll go over first of all to our top trade over the last week, our portfolio performance using our exclusive research-driven strategies. As you can imagine, our top trade this week has been on oil. We've actually caught both sides of the trade. So we've caught the move higher and also the move lower as well. And we've caught that via a commodity currency, which is US dollar, Canadian dollar, which was earlier on in the week and last week as well, where essentially when oil rallies, and I'll show you this on the chart shortly, but when oil goes up, US dollar, Canadian dollar goes down, and also when oil goes down, US dollar, Canadian dollar goes up. There's a very tight correlation, which we'll be exploring with you on a very special training webinar in more detail on commodity currencies. What you need to know right now is that oil broke down over 5% yesterday. It was a very lucrative trading opportunity. You just needed to get on board for a seller essentially. Once the momentum picked up to the downside, it moved very fast. We saw over a 200-point move or a $2 move within just a few hours. So it was quite a lucrative opportunity and very straightforward to trade on binary as well. All you're looking for would be to stagger into that trade for the price to be lower time frames, looking to be in and out the trade within a few hours, and you can capitalize on these moves off major news items like OPEC meetings. They provide really fast, quick opportunities to benefit, which is why we did a special webinar about that on Tuesday. So if any of you who are on today's session caught Tuesday's training, if you managed to catch the move on yesterday's OPEC meeting. Feel free to put that into the chat as well. Congratulate all of you who did manage to do that. It was a very lucrative trading opportunity. So in terms of the next big movers that we've got coming up, news items that can move the market significantly, we've just had the OPEC meeting, which is yesterday, which you will see has definitely had a very big impact on oil. So we've seen a significant move on oil lower. As we go into June, there's a lot happening. We have the UK election, which is, of course, on the 8th of June. We have the FOMC statement, which is going to be on Wednesday, the 14th of June. And we have the ECB meeting as well. So all of those are going ahead over the month of June, provide more volatility, more opportunity as well, particularly the FOMC statement. We could see some big moves on gold, silver, US dollar index, platinum, could provide some big opportunities on that announcement. So you definitely want to be aware of that. In terms of major news items we've got coming up today, we've just had some data come through from the US. Most of that has been on the positive side, so we've seen strengthening of the US dollar, a little bit of a pullback for gold and silver, in fact, over the last hour or so. We've got the Michigan consumer sentiment coming up at 3 o'clock London time. The big one today is the US Baker Hughes oil rig count. So earlier on in the session, oil did manage to get a bit of a bounce. It got bid back up after a very significant decline yesterday. We're starting to see it roll over again, and US oil at the moment is hovering around $49 per barrel. Now, the Baker Hughes oil rig count has been going up consecutively every week, and that is essentially signaling oversupply in the market. And if we see an increase again in the oil rig count, that will be perceived as bearish for oil, and you could see a continuation and resumption of the downward trend. So I would look out for that. Be careful if you're trying to pick a bottom in oil at the moment. It had a very significant move yesterday, but it could continue to follow through to the downside. We're certainly looking out for the potential for it to keep breaking down. So essentially, we'll be looking at two types of trades today on binary. We'll be looking at the higher and the lower type of trade. Now, the way to take advantage of this is very simply, all we need to get right is the entry, the time frame on the trade, and also, of course, whether the price we want to be higher or lower. It's all very transparent, so you know upfront what you're risking on the trade, you know what your percentage return is on the trade, you know all the criteria. You can choose the time frame, how many hours you want the trade to expire, what your payout is, and what you want to purchase, whether it's higher or lower. So we utilize this type of trading on binary. It's very lucrative for both fast moves in the markets where you want to be in and out of a trade quickly, like oil yesterday. It also can be good for some of the swing positions as well, where you want to stay in a trade for a few days, but you don't want to have a large stop loss. So that can also work quite well for both of those sort of strategies. So what I'll do, I'll bring you over to the charts. We'll look at the markets. We'll go through some technical analysis and charts. We'll go through the fundamentals as well. And any additional questions, feel free to ask those as we go through the charts. So what I'll do, I'll bring you over to my charts. Hopefully you won't lose any sound at all when I do this. So just bear with me as I bring out my screen for you. Okay, so what we'll do, first market we'll go over to, thanks Reese, okay, great. First market we'll go over to is going to be oil. So oil set up yesterday for a solid sell short trading opportunity. Again, we had discussed this on numerous occasions where a lot of this move to the upside was being priced into the market off the back of expectation that OPEC would agree to extend their oil production by 9 months. In fact, when that news item initially hit the market, we saw a 3% move to the upside when both Saudi Arabia and Russia publicly said that they would agree to such a deal. However, it hadn't been made official at that point, but publicly they had agreed that they would support a deal like that. And we saw a 3% move in one day, and it's been a very significant move actually over the last month since we bottomed out right at the end of April, beginning of May. It's been a very significant move over the last 3 weeks. This move, if you take into account the lows to the highs here, it's been over an 800-point move or $8 move here for oil. So it was getting a little bit short-term oversold, and a lot of this move had already been baked into the price. If OPEC had come out with something unexpected, so for example, if they had come out with plans to continue the extension for 12 months as opposed to 9, that would have likely caused a catalyst for more upside. We would have very likely seen a more significant breakout in oil. But as it was, as they've essentially gone ahead with what was expected, it's been a case of just buy the ruse, sell, buy the news, buy the rumor, sell the news. And we've seen this big move lower here in oil, and essentially we've come back down to the next area of support. So currently we are at first level of support on, we'll move over to Brent crude oil shortly as well, but we're hovering around just above 48 US dollars per barrel is where US oil is finding support at the moment. You can see here it's developing a little bit of a hammer structure on the daily chart. This has been quite changeable today. We've seen quite a lot of chop with oil here. You can see there is definitely a supportive zone which is holding right now. We could see that get breached again later today if the oil recount, which comes out at 6 o'clock London time, is showing further oversupply in the market. The issue at the moment with the OPEC meeting and the extension, which has been baked into the price already, is the fact that OPEC haven't really dealt with the issue of what happens in 9 months' time. And that is what, so a lot of the move has been priced into the markets, and that is concerning at the moment for the oil price as to whether it will be able to sustain above these levels at the moment, where you've got a continued oversupply in the market. We've seen oil production in the US is now at the highest level since 2015, so we've got that to contend with, or we might continue to consolidate around this zone. Today is an important day to see whether oil continues this breakdown in price. If we look at it based on a weekly chart here, you can see, in fact, we can also go over to a monthly chart here where it's looking a little bit more bearish now. We've got major trend channels which did get breached at the beginning of April here. So we broke down from a major underlying zone of support, which got breached at the end of April as we really broke through key levels. We had retraced back within this underlying channel last week, but now we're back below it again. You can see it more clearly on the weekly chart. So it really is at a bit of a decision point. If by the end of May, which is not far away, we go into next week, Wednesday will be the last day of May, if we close back below this on a monthly closing basis, below all of this trend support, it would suggest technically that we could be heading lower and we could be on the verge of a much deeper correction for oil. However, if it builds up momentum, holds above $50 a barrel, which is what a lot of OPEC members would like to see, hold above that level and higher, then we could be on the cusp of further follow through as we progress into June and July. So certainly into the end of this week, into the close today, number one, into the end of this week as well, on a weekly closing basis, and into the end of the month as well, which is not far off, this is all going to give confirmation as to whether the oil market is going to start to find support around $49 to $50 per barrel, hold above that level, consolidate or go higher, or whether this is just going to be the start of a much deeper correction again. We're just going to see a follow through to the downside. You can see as well where we've come up to overhead resistance. We're starting to roll over and we've bounced off that key level of resistance as well. So we could start to see a further decline in price. So it's decision time, but already we've made a lot of our profits already on the downside move here on US oil. It is also worth noting the inverse correlation as well. So where we saw the big move lower yesterday for oil, we also saw a supportive bounce for US dollar, Canadian dollar too. So it's very oversold at the moment short term. We've capitalized on this breakdown in US dollar, Canadian dollar over the last week. So where oil has been surging and breaking out to the upside, we've been capitalizing on that via a sell short on US dollar, Canadian dollar as well, which broke down well over 175 pip move to the downside. And now it's forming a bit of a base here. So if oil was to continue to sell off, you would naturally then look at US dollar, Canadian dollar to build up some support. And in fact, if US dollar, Canadian dollar has enough momentum today to break out of this downward trending channel, it essentially could create a bull flag formation. We would then look for further follow through as we go into next week as well. So we're keeping an eye on the US dollar Canadian price structure too. On the daily chart, you can see very clearly where we've been ricocheting between support and resistance going back to February of 2017. So we've got these levels of support and resistance. Very notably, it has bounced off the lower end of that channel. If oil continues to sell off today, if we see further weakness, US dollar Canadian dollar should get supported, and that's the correlation that we'll be looking out for today. Now moving over to the metals. Now what I would first of all put on your radar, US dollar index is surging. Okay, we've had some stronger than expected data today, and with that we have seen the US dollar is breaking above the weekly highs now. So you can see it's starting to surge. It's quite oversold at the moment. This could be on the verge of a much higher move here if we can build up momentum to the upside. What do you need to understand about this? Okay, a strong US dollar will create weakness in several cross currencies, several currencies which are pegged against it, especially the majors such as Euro, US dollar. You could see weakness in GBP, US dollar as well. We'll be watching the inverse correlation with gold and silver, which broke out earlier on today, but they're a little bit muted at the moment, a bit subdued off the back of the dollar starting to rally. If the dollar keeps going up, it will also create more weakness here for oil as well. So if we see strength in the dollar today, we're likely to see a little bit more weakness in oil, and also other markets like the Australian US dollar I would keep an eye out for. So right now, the US dollar index is rallying. It's just about broken above the weekly highs, and I would look for the potential for a further rally here over the course of next week if we close near the daily highs here. It's starting to find support where it needed to find support. Above the 96.50 zone was very important. We'll monitor this over the course of the US session today, but you can see also on a weekly closing basis, looks like we're going to form a rejection candle at a very key level. This is major previous resistance turned into support. If it closes above that on a weekly closing basis, it's going to likely lend more support to the US dollar, and therefore we could see muted moves on gold and silver. So then if I move it over and just show you the price action at the moment with gold and silver, gold has popped overnight, so it has broken above some major overhead resistance. It's currently trading at 1,266 US dollars per ounce. On a weekly chart, it's right back up against the major overhead resistance on the weekly. It's taken out last week's highs as well. It's around 1266 at the moment. On the monthly chart, we've got a rejection candle forming too. So there is certainly some support on higher time frames for gold right now, but it could still retrace into the close today. You need to be a little bit careful here because this move could be faded. It could be sold into. If the US dollar was to build up strength today, we're seeing a little bit of hesitation, overhead resistance at the moment around the 1270 zone. It could also break out. If we've got enough momentum on gold here to break above 1270, it will likely shoot towards the 1290 and revisit the April highs here as well. It has done well so far today to break out of this downward trending channel, which has been the case since April. We saw an inside candle day yesterday, which is built up a pennant formation on lower time frames. We were building up pressure here essentially for a breakout. We've seen a breakout today, so we've got this pop higher. In terms of gold's normal day-to-day volatility, it's already done what you normally expect gold to do. So gold typically moves 150 to 200 points per day at most on a day outside of any major news items or geopolitical risk. And there's not really too much scheduled news unless we get some unscheduled geopolitical risk or some Trump tweets and politics which could cause a safe haven bid. So there's that to watch out for. But at the moment where gold is poised, it's around 1,267 US dollars per ounce. It's got some overhead resistance to contend with. I would watch this closely today, and also the inverse correlation with the US dollar too. So I'll be looking out for that to see what sort of price action that we get if it has the ability to go higher here. If it closes near the daily highs today and it breaks and closes above all of this 1265 zone, we could get more momentum next week. You could argue here we've got a nice supportive trend channel, and it could pop up and even revisit the 1300s on a strong close. But I would just like to see a little bit more confirmation. With that said, silver is actually up and running and moving quite well. So silver is just about broken above this pennant formation, currently trading at $17.33. It's also coming into some major resistance here. You've got quite a lot to contend with above, but it could still go as high as $17.50 before it starts to pause again here. So silver is moving quite well at the moment. We're getting certainly a bit of an uptick on silver too. So we'll be watching these markets very closely. I would also draw your attention to the Australian US dollar as well. So Australian US dollar very strongly correlated with iron ore and to a certain degree gold as well. And we did see it break down yesterday, so it broke below this key level of support. It also managed to take out, I'll see if I can bring up a more raw chart for you. There we go. So we've come against overhead resistance again here this week. I would suggest we've got the bear trap forming, a bear trap from this breakout to the upside, or a bull trap, I should say, because we've broken above the highs. Buyers would have got potentially triggered on this move, which then got faded after the FOMC, the minutes which came out on Wednesday, got sold into, and we've also broken below what you could call a bear flag formation here, which is usually a continuation pattern. So a bear flag formation is normally within a downward trend where we get a rally. You get short-term higher lows and higher highs. However, ultimately, a move like that often then gets sold into. Okay, and you don't ever take out the previous swing high, which is on the left here at the moment, so it didn't take out that level. And we've broken through the lower end of the bear flag, so we've broken that down overnight. We've broken through that level. Australian US dollar treading a bit of water at the moment, but so far, as long as it stays below this trend channel, it has broken. And if it closes below that, particularly if we build up strength on the US dollar today, we could see more downside. And that's what I would be looking out for. It's a little bit unusual to see what is going on in terms of market correlations today. And we'll see which one really wins here today, because gold is currently trading at 1,268 US dollars. We've seen a breakdown Australian US dollar. The US dollar index is rallying, and we've also seen the S&P 500 break out to all-time highs, which is a bit unusual, but normally this doesn't last for long until it gets resolved. Okay, so what you would expect is the S&P 500 had a solid breakout yesterday, closed at the highest level of all time, essentially. Today we've got an inside candle forming. I want to see whether the S&P 500 is going to build up more momentum, take out yesterday's high, in which case, if it does build up more momentum, that would likely put a pause on the move on gold and silver. On the flip side, if the S&P 500 pulls back today, it could start to offer a potential for a sell short if the S&P closes back below the 2,400 zone, and it's essentially a failed breakout. If this is just going to be a bull trap here where buyers have got in right at the highs and it's going to roll over and essentially start correcting. Short term, it is a little bit overbought. It doesn't mean it can't go higher, but it is a little bit short term overbought. I would suggest if gold and silver keep going up today, we might see that correlation play out where we see the S&P start to pull back or consolidate. It won't be purely because gold and silver are going up. It's just something to consider, that where we're seeing the risk on or risk off environment, we want to be aware of what is going on with the intermarket correlation. So we are seeing capital flow into gold and silver. It's less likely that the S&P 500 will continue to go up today. We can also just have a look at the NASDAQ. NASDAQ broke out to all-time highs yesterday. It is at resistance here, so it's pausing so far, not really too much follow through from yesterday yet, but we haven't opened for the US session just yet. It will do in about 7 minutes time. The Dow Jones broke out also. Actually, that Dow Jones hasn't quite managed to get above all-time highs, so it's not quite managed to breach above the February highs here as the S&P 500 has. We're also getting a little bit short-term overbought here, so we can watch out for this afternoon. We're only just starting to get going with the US session. The opening bell will be in about 6 minutes time, so there's lots for us to be monitoring over the course of the US session today. But certainly momentum, right now is on the side of the precious metals. Yesterday was a very muted day for gold and silver, and today we're seeing a lot of action now. So gold is starting to break out. I'll be watching gold for the close here. If it does break above and close above on a weekly closing basis, the 1270 zone, if it closes above that, it does open the door up for higher prices. The higher time frames are worth keeping in mind at the moment, particularly the weekly chart here for gold. It's getting some good follow through. We'll also just move over to silver again and the overall price structure on this on higher time frames. Yeah, the weekly chart has certainly got a lot more upside potential if it can really get going and break above the 1750 zone. On a monthly closing basis as well, we've got a large rejection candle. We discussed this previously. This is a monthly chart which I utilize for silver, which has just got major channels outlined on it. We go back to this every so often on the Commodities Corner. I don't change these levels, these trend channels, because they're in place, they're fixed, and you can see that we are again getting a bounce right off the lower end of this trend channel going back to 2015, which has been supportive thus far in silver, building up a base here over the last year and a half since we broke out of this huge pennant and downward trend channel going back to the end of 2015, and we're seeing it get respected. So you could also suggest here that this is in fact a bull flag formation, which is the opposite to a bear flag, where we would see therefore a breakout to the upside as opposed to the downside here. So this could be just a continuation pattern, the bull flag breaking out to the upside, getting supported at the lower end of the trend channel, and we may well see more upside here for gold and silver in the weeks to come. I would suggest we may also get the potential for another buying opportunity on gold and silver for a more longer term trade over June and July, dependent on the statement from the FOMC as to whether they go ahead with interest rates or not. So that is coming up not too far off now. It'll be a lot more firmer focus as we go into July. That is on Wednesday, the 14th of June. Okay, so just have that in your diary. There will be no doubt a big trading opportunity off the back of that too. If you enjoyed today's analysis and you would like this on a more regular basis, particularly if you want to join us for the big trading opportunities coming up, also the FOMC statement, which is only just over about 2 weeks away now. We've got the UK election coming up soon as well. Next Friday is also non-farm payrolls. To get exclusive access to the Gold and Silver Club, to join our private members live trading room, you just need to go to www.jointhegoldensilverclub.com. Okay, complete the application form, and we will, of course, get in touch with you ASAP. Roland, thank you for that note. I'll tell you what we'll do. We'll do that at the end. I'll come back to that market and we can take a look at it. Just in terms of what you get by being a member of the Gold and Silver Club, and if you really want to take your trading to that next level, if you just really want to break through a little bit more consistency, you get the following by being a member of the Gold and Silver Club. You get trading strategies, so our online training course where you can learn all of our strategies. You get exclusive access to our weekly live trading room webinars and recordings of every session, so you can join us during the week for our live trading rooms. You get live trade setups ready to implement, so real-time notifications with the exact entry, exit, every single step of the way. You get notified with the trade management of every position that we are taking at the Gold and Silver Club. You also get the inside track, so the week ahead trading plan, which provides you with a trading watch list for the week ahead, and you get access to our Private Traders Academy members website with all of the resources, which you get a lot of access to our resources via that, which includes all of our training videos, all of the strategies that we provide, and you get access to all of our trades as well. Okay, fantastic. So I'll just put a quick link there, guys, into the chat for you, just so you can find us via the link. Okay, so it's www.jointhegoldensilverclub.com. Okay, right, so finally, Roland, just going back to your question. Let's bring that out. Okay, so Roland's question was just on the FTSE at the moment. So if we have a look at the FTSE, we are a bit stronger actually on the FTSE rather than the US equities at the moment. So the FTSE is breaking out again here we've just broken above, in fact, the weekly highs here at the highest levels now. So we are, on track potentially if the FTSE can actually continue this surge. And it's got some overhead resistance here, which we're coming up against at the moment. So that is roughly about around the 7,550 zone is the next major level, which is not far away at all. If we get a breach through that, there is potential for more upside. You've got quite a lot of clean air, in fact, on a breakout higher to come back up towards the upper end of this channel. So I would suggest a breach of that, we could see more follow through on the FTSE. So I would certainly be aware of that. It's already managed to break above the last couple of days worth of highs here. In fact, at the weekly highs, of course, monthly highs as well. Short term, it is a little bit overbought, but that doesn't mean it can't go higher. So if it can breach above some key resistance overhead, round numbers like 7,550, a breach above that would likely just cause additional follow through as well. So just have that on your radar. We'll be watching out for the correlations today. Also, just going back to the S&P and the Dow Jones, we're coming up about 1 minute's time will be the opening bell. If we see additional momentum to the upside on the S&P, if it breaks above yesterday's high, that is where we'll start to really clear above a lot of resistance, and it has a fairly clean run for approximately about another 20 to 30 point move higher here on a breach above the previous day's high. And with that, you would probably see a pause to the upside on gold and silver as well. So just if you're actively trading these markets this afternoon, again, just going over to gold, show you on lower time frames here, it's pulling back a little bit. I've actually got a sell signal on my lower time frames here for gold. So it's starting to pull back. So it is at resistance again. Gold has done its normal day-to-day volatility in terms of how much gold moves day to day. It's normally about maxes out about 150 to 200 points. So it's already done over 150 points from low to high today. So it suggests there's not really too much more momentum left in gold. It could be next week provides a really good opportunity and tees up for a good buy, but I would be a little bit careful here buying gold around these levels. I'll definitely be tracking the equities very closely at the moment too. And also, if gold does pull back today and we start to see it correct further, just bear in mind that a market which is correlated on the commodity currencies is Australian US dollar, which is broken already through support, is starting to roll over a bit. So if that continues the momentum lower, that could also be a good momentum trade too. So just be aware of that. And we're also watching out to see how oil does over the course of the Baker Hughes report later on today. The Baker Hughes report will be coming out at 6 o'clock London time, so it's not far off. It's within about the next 3.5 hours. So we could see a little bit more selling again on lower time frames, which is what I would suggest you just look at oil at the moment to get a bit of a resolution. We're consolidating. We're not really building up a huge buy side move here at the moment. We're just seeing it find support at key levels around 48.50 to 49 at the moment, but it's coming back down again as we start the US session. You can see it's rolling over, and again we go back to the US dollar index is building up momentum. So I would suggest look out for the momentum here, pay attention to the US dollar, and actually oil just now is starting to retrace a little bit further. We're starting to see this move pick up momentum a little bit more to the downside here. So I'm watching out for these opportunities, but certainly we've got quite a lot to be watching this afternoon and some good trading opportunities, no doubt, which are going to develop. Okay, so with that, guys, again, if you enjoyed today's analysis and you would like this more regularly during the week, just make sure you make an application to join the Gold and Silver Club, www.jointhegoldandsilverclub.com. I wish you all a profitable day's trading. Have a great weekend, and of course we'll catch you back here for the same time next week as well. And of course very much look forward to working with those of you who will be making an application to join us at the Gold and Silver Club. Okay guys, so all the best, take care, and we'll speak to you very soon. Thanks everyone, bye bye.